All right, welcome back to our series, and this is the last episode on our series, and I'll be talking about 30 soup SMTs and how to execute them. After you've gotten your bias, you've gotten your analysis, how do you execute them? Once again, welcome to my YouTube channel. I remain your humble boy, the 942 trader. So, looking at Bitcoin USDT, we have been stuck inside of this we have been inside of this trading range. Everything that has been happening inside of this 1 6 month candle. So let's go ahead and mark out the highs and the lows and the 50%. So that's the high and the low and the 50% of the range. So now, since candle 2 has touched soup candle 1's high and we've closed back inside of the range, now we can now go to the lower time frame, like the monthly, 3 months, to look for what? To look for a key level that this distribution candle will use to distribute. Because if you look on the higher time frame, the 6 months, the key level is what? The rejection block here. But pricing gets up to there before dumping. So let's see what happened. So on the 3 month time frame, what do we have here? We had price did what? Touch the soup above this 3 months high and close below the low, telling us that we are having lower prices. So inside of this month, this last 3 month candle that we have here, this current 3 month candle we had here, sorry, this 3 month candle we have here, um, you see how the candle opened, trade higher and dump lower before taking out the target, which is the CRT low. So on the 3 month chart, I'm not really seeing any key level here that price used to dump. We just had a close below and the next candle opened and trade higher and dump. So let's go to the monthly and observe if there's a key level. Now beautiful. Now if you look at the monthly time frame here, now you will see key levels that can be used to anchor price delivery to the downside. Now one of them I can see is this um overlapping fair value gap. Are you seeing the overlapping fair value gap there? So that was the overlapping fair value gap I was watching that made me took sales on Bitcoin on the weekly time frame. So if you remember, I posted a chart of me taking sales on Bitcoin on the community post. So you can see up here we had a turtle soup and we had a close below this this down close candle. We had a close below it telling us that we are bullish. Aggressively we displaced below this low, telling us that we are bearish, and price now came into the what? The fair value gap and the overlapping fair value gap, taking out this high and dumping aggressively what? To the target, to the CRT low. So now how do you execute? Now you execute on the lower time frame, like daily, 4 hour and 1 hour. After you frame your bias on the monthly, 3 months, 3 month charts, the monthly charts, or the weekly chart. So with that said, you can see here we had these overlapping fair value gaps, which is known as a balanced price range or inversion fair value gap. So we have that as our key level, and this is the monthly candle of what? January. So let's put a vertical line there. So this is the time opening time of January, and we'll go to the weekly. Now on the weekly, let me make this to be visible on the weekly. So now on the weekly, we had that key level from the monthly time frame, and you can see that everything that has been happening prior to the key level being hit was inside of this weekly candle, this weekly range. Everything was inside of this weekly range. Everything was inside of this weekly range. So with that being the range, with this being the range we want to trade, and we'll mark out the 50% here, like so. So with this being the range we want to trade, and we've identified the range we want to trade, now we are waiting for price to do what? To soup the range high into the key level. Then when that happened, and when that happened, we go to the lower time frame to look for our more than one entries, our fair value gap entries, our breaker entries, our OTE entries, and so on. So what I just did, I identified the candle, like I marked out the candle that caused the manipulation with that vertical line. So if I go to the 4 hour and the daily, we know that okay, it was at this point the manipulation started. So, and this is our 50% here. It's 8,237. That's our 50%. So now let's go to the 4 hours. Since it's a weekly range we are looking at, now you can see on the 4 hours, this is the what range high. Let me take that key level to be visible on the 4 hours. So visibility is hourly, yeah. So on the 4 hours, we had price did what? Turtle soup this high, which is the weekly range high, into the key level, and immediately you close below the last up close candle, gave us the first signal of what bearishness. But if you look closely here, now we didn't just close below this candle, but we have this series of up close candle. Now in this case, now we are not having a clean what model number one. We had series of candle that took out the range high into the key level. So if you want to play safe in this execution, you have to wait for price to close below this up close candle, which price did here. So if you're waiting for this close below to confirm that price is what's bearish, then we now have like this turtle soup, and we have the CIS, the change in states of what's delivery there. Then now you can now mark out the what the inversion what fair value gap as your entry. This inverse fair value gap as your what entry for price to come back to what tap into it. Now why are you marking the inverse fair value gap as an entry instead of the model number one? Now that is because the model number one in this case is not a single candle that stabbed into the old high or the range high. It's not a single candle that stabbed into the range high into the key level. It is a series of what up close candles that stabbed what into the old high, into the range high. It's a series of up close candles that stabbed into the range high. That is why I am marking the words inverse fair value gap as my entry point. So you can see we got triggered here on 3 p.m. Friday. That was the first time we triggered after we closed below the CISD, and price consolidated there for a little while, and Sunday 3 p.m. the dump started. So we dump straight away to the 50% of the range. You can see there. So your execution can be yeah, yes, that was the entry. Yes, that was the entry. So your execution can come in there during Friday if you set a limit order and your stops above this high. is okay, and you target the 50%. That's the clean 1:3 risk to reward ratio. So that is how you execute using what total soups and SMCs. Now, if you go to your Ethereum chart and look at this area, you will find the SMC. That will be your what homework. Do well to check it out. It will do you a lot of favor. So after we hit the 50% of the range, price consolidated a little bit and dumped the what take profits, the range low. So this is how you execute, and thanks for watching till the end of this video, and please like, subscribe and share. So this was the trade I took on what Bitcoin USDT that you saw me post on the what community, and this is exactly how I took it. So for 1v1 section, you can reach me out on X. The handle is still the same, the 942 trader. Just reach me out there and we'll discuss. Thank you for watching. I love you guys and stay safe.